Transaction of this size anywhere in the world would probably take 3 to 4 years to become accretive, and that was a parameter that we were using. I was looking at it purely from a numbers point of view, no emotions attached. We had a number where we would walk away, and completely dispassionately, if I can say so.
Were you prepared for this to become a sort of a race to the finish like Chorus went? You said there were 2 other private equity players in the race, so could this have become an auction?
We were actually shooting in the dark because we knew that there were 2 other people who were in the race. We didn't know who they were, so we didn't have a sense of what they might want to bid, and therefore it made it much more difficult for us. We had no idea where we stood amongst the 3. We had no idea if we were being looked upon favorably at all. So it was, we were groping in the dark until the very end.
Come December 2006 and the action picked up. Bids were flying in. One bidder offered $32 for every Novelis share, but asked for exclusivity in negotiations. Another made a conditional bid of $32.50. And in January came a stock-for-stock offer that potentially valued a Novelis share at $45.
And India Inc.'s hunger for acquisitions is insatiated yet. It seems Aditya Birla Group company Hindalco could be on the verge of making the biggest ever overseas bid by an Indian company.
News of a possible acquisition broke on CNBC TV 18, but Kumar Mangalam Birla offered no comment.
The deal size is in the range of $8 to $10 billion. Very important.
Almost cost him the deal. Novelis thought the Birla Group had leaked the information to the media and threatened to call off the transaction. The next time, in a couple of days, when we put the question again to Kumar Mangalam Birla, he vehemently denied any deal was in the making. Now this time Novelis thought the Birla Group was backing off. Kumar Mangalam Birla had to put his legendary persuasion powers to work.
February 7th was set as the final bid date. Hindalco put in the highest cash offer, $45.20 to a share. And then, on Sunday, February 11th, at a last-minute press conference, Kumar Mangalam Birla announced that he had bagged the Novelis acquisition. But when the markets opened on Monday, Hindalco's stock tanked. For a company with almost zero debt, Hindalco was going to borrow $2.8 billion to finance the acquisition. Add to that the existing $2.4 billion of debt at Novelis and a balance sheet steeped in red due to loss-making fixed-price can contracts. The street slammed the deal.
I was completely prepared for it to start with. It wasn't a surprise. It didn't come as bolt from the blue, because I don't think in India we're used to transactions of this size. And very clearly, I was very clear about this, that we would be very articulate about the fact to start with, that this transaction would hit earnings for the next 3 years. I didn't want to couch that. That was one of the first things I said after the transaction was completed.
Right.
And I thought that was something that our shareholders needed to understand. I had the choice of getting the approval of shareholders through a postal ballot. I opted to have an EOGM.
Yes.
Because I thought that shareholders needed to have that chance to
see you
air
face
their
to face, maybe
opinions. But having said that, what we did was to create a communication package around the whole transaction. We've done our best in trying to communicate the story. Why Novelis? What sense does it make for Hindalco? I have no doubt actually that in Hindalco's history this will be, if not the most significant, one of the most significant transactions to have happened, and it will be a huge inflection point. It will be a transaction that we will look back on and say that, thank God this happened, and it catapulted us into something that we could not have achieved organically, not at least for the next 2 or 3 decades. So I think that there is a difference in the time horizon of investors versus the management, that there's no getting away from that. I think management walks a very thin line between keeping the investors happy and doing what's right for the business from their point of view. And I think the only way to bridge that gap is to be as effective in communicating and being as transparent in communicating details of transaction like this as you can.
A yes or no question. Did your confidence get shaken even for a moment when your stock plummeted?
No,
Not at all.
not at all.
Hindalco paid 100% premium to the average stock price of Novelis in 2006. It paid 40% more than the next cash bid. On an EV to EBITDA basis, global majors Alcan and Alcoa traded about 6 times. Hindalco itself trades at about 7 times, valued Novelis at between 10 to 12 times. No one in the market thought this was an expensive deal.
The market was valuing it for the short haul. We were valuing it over a much longer period. And the replacement cost of the assets was something like $12 to $14 billion. So if you, by any measure which you apply to value a company, I am convinced that the price which you finally paid justified all those measures.
An up to 25% reduction in Hindalco's earnings next year and a mountain of debt. Hadn't the company bitten off a bit more than it can chew?
I also think that because it's a big swing from a practically zero debt company at 3.1 billion, it's become much more dramatic and much more hyped. So obviously we had, there was some disquiet in me as the CFO of the company. But as the business person, and I have been in aluminum business for well over 25 years. So from that point of view, I always had the conviction, and I continue to have the conviction, that Novelis will, in the not too distant future, in the medium term, will justify the confidence which we have placed in that asset.
The financial challenge is going to be a tough one, but the bigger, more crucial challenge is going to be that of integration. Coming up, how Kumar Mangalam Birla gets up close and personal with Novelis' employees.
On this day, it's the turn of Novelis' South American division. Tomorrow, another operation, another video conference.
Very quickly explain the bridge between operating gross profit and operating EBITDA.
Yeah, all this cash is...
Birla and his team are going to do this week after week till they've identified every chink and made a note of every possible synergy. It took them 3 to 4 years to integrate the previous acquisition of Hindal. This one's different.
They are not, in classical terms, overlapping companies. We have different product scopes. We are at the low end of the product, Novelis at the high end of the product. The markets, we do not have common markets. We do not even have the same capability overlap. So by the classical integration process, what is meant that there will be one team operating across the world, that is not what is going to happen. What is going to happen is an integration of culture. So there will be a cultural integration. There will be a MIS integration. There will be an integration of processes, integration of softer issues. But the real hardcore businesses will be business as usual.
Facilitated by key Hindalco people in finance, operations, human resources that are helping Novelis understand the Birla way of doing things. Next will come an India Novelis Hindalco team that will guide the operational integration and deal with issues of overlap. It will also ensure the tough 3-year targets put in place by Birla are adhered to.
What's the checklist you had in mind, that you were sort of storing there, saying, if I get this deal, these are the first 5 things that the team needs to put together, on a priority basis?
We needed to have a good MIS in place. I think the company, self-admittedly, don't have an MIS that actually gives information real time. So that was one very obvious, very simple sounding, but very obvious gap that we needed to fill. We needed to understand the people involved. We needed to understand where the skill gaps were, who the bright stars were. That was second. We needed to understand the technology completely. Our technical people needed to absorb the technology completely. We also needed to be clear about which people to send from here into what positions, if any, at what levels of seniority. So I think all of these things were on a checklist as being the first few things that we needed to look into after the acquisition.
But how involved do you stay in the process?
It's very important to get the charter right, which I'm completely involved with. And till the time that there is a sense that, there is now seamlessness across the two organizations, the two erstwhile organizations, that the initial teething issues have been overcome, that people see themselves as one team. Till I have a sense of that, I'm very closely involved. Once I have a sense that no, all of this is now behind us, and that starts to show up in the results of the company, I take more of a backseat. It is truly a pleasure to speak with all of you through this video.
He hasn't been to Novelis yet, but right after the deal, Birla reached out to 500 senior managers via a webcast. He shared his vision for Novelis and fielded questions ranging from, will there be a new company name, to what are the new products on the anvil?
It's very important to understand for the acquired company what the acquiring company is all about, what are the expectations from them, also in terms of a certain discipline that we have as an organization, a certain rhythm that Hindalco has that we would expect Novelis to follow. I think that that is something that I would do very upfrontly. I don't believe in having a honeymoon period where everything is very hunky-dory and we tell them, you're great, there's nothing wrong with you.
It can go wrong. You could force too much of your style onto them. They are in a different country, in a different working environment. They come with their own history and culture. Where do you draw the line?
Well, they come with a lot of different cultures in terms of the fact that they, have a presence right across from Cleveland and Sao Paulo to, Seoul on the other side of the globe. But I think that it's a matter of judgment. It's a matter of seeing what will add value, not trying to fix what ain't broke.
Which explains why the Novelis management is almost unchanged. Well, there's a new CFO and a new CEO. Martha Brooks, the former COO, has moved up, giving the Aditya Birla Group its first woman business leader.
The maturity of an organization is actually demonstrated in its ability to live with status quo for some time to see really whether change is required.
Though the one place change is required is in reducing the cash constraint at Novelis.
The one thing which has hurt Novelis due to an increase in LME, apart from the cancelling contracts, is the need to invest more in working capital. So we are trying to get a sizable chunk of the term loan facility in the form of what is known as an asset-backed loan, which is a revolver, which then gives you it gives a flexibility to borrow on the basis of your assets. So if LME goes up, your receivables go up, your inventories go up. So therefore the facility for borrowing working capital on those higher value assets also increases. So and what that asset-backed loan has a far lower interest rate than the normal term loan.
And so the nitty-gritty will go on for the next many months. In fact, the jury is going to be out on this deal for the next few years. Will Kumar Mangalam Birla be considered the visionary his father was? It's not the end of the story, but it is the end of this episode. Next week on Rules of the M&A Game.
Could you believe it? Bank of America, which was the bank which funded us, these two boys who came from Bombay, they opened the shutter of the bank. And I'm not, there's no exaggeration here. They opened the shutter of the bank. They pulled out the banker's check, handwritten. You've never seen a banker's check which is handwritten. A handwritten banker's check signed by both of them, and Monday evening, deal concluded.